Good. Well, we usually say good afternoon or good morning or whatever. I don't know. You're watching YouTube video, so whatever it is. Hey, everybody. Welcome to another episode of the Everyday Trader. This is one of your hosts, Eric Hale from Trader Oasis. And also, I'm joined with my usual partner in crime here, Greg Jensen.
I'll add the correct thing. It's 2 a.m. Put your phone down. Stop watching YouTube. Go to
Go to bed.
bed. Go
2
to bed.
a.m. Why are you watching this at 2 a.m.? Good for you. Well, maybe they're having trouble sleeping and they need to watch. So here we are. We're recording this on the 7th of November, 2025. We've just had two very bad days in the market. What do you think, Greg?
Well, I'm going to agree with our friend Barry Ritholtz, who tweeted today that we are 3 to 5% from all-time highs. Yeah, I'm not too worried about a major correction. So far, the drawdown, yeah, it's been painful for a few companies. There've been a couple individual companies miss earnings and been just absolutely devastated.
Well,
I mean,
some
like
companies have not missed earnings and got devastated. I think
that is true.
Robinhood
That is true.
down almost 14% at one point since earnings, which were phenomenal. I mean, up 100%. Revenue was up 100%. Everything was great. They had a weird reaction after the hours, but they ended up being up after hours. And then they opened yesterday and just went down about 10%. And at one point, they were down another 4% today. Now they've recovered. Why do stocks do this? Why do bad things happen to good companies? Or maybe Hood isn't a good company? I don't know. What do you
No, I
think?
think another one that's in that same category is Palantir, right? Palantir's earnings were record revenue growth, record earnings growth, and the company got absolutely slammed the day after earnings. And to me, it's not so much that they're doing anything wrong. This is what happens sometimes with really high growth companies when a lot of optimism is priced in. We use a term, I know you've heard me say it before, they're priced to perfection. And you know, even when sometimes when they hit perfection, investors say, okay, I'm going to take some money off the table. I just wanted to get through earnings. They've announced their earnings. Okay, that was the event. I'm going to take some profits because I've been in it for a long time. And then they'll look for a dip or a pullback in that stock and get right back into the same company. So I don't necessarily view it as a bad thing when
Well,
good companies have good earnings and then have a pullback with it because I view it as opportunity.
I have an image that it reflects exactly how this happens. Let me share this with the community. So here's an old. I don't know the source of this thing, but this cartoon is hilarious. Where on the top left-hand corner you see I've got a stock here that could really excel. And somebody over here really excel, sell. Everybody sell. Then somebody, this is madness. I can't take it anymore. Goodbye, bye.
Yeah.
Um, seriously though, um, what happens often, and it's is, I did some research on Apple. Um, I was surprised. I used AI to really help me out, but I was surprised at what I took away from that is that Apple is almost always down the day after earnings. And the explanation for it is a rather mechanical sort of thing, is that some people will take profits to close, which is not a bad thing. And if somebody's, it doesn't mean they're bearish if they're selling. It doesn't mean anything other than taking profits, which some people do. But also, a big part of it is this mechanical thing, which we've really come to understand more about with dealer gamma aspect. Since the dumb money situation, the Wall Street bets, where it was clearly demonstrated how retail traders, if they get together and decide to trade in a certain way, can really affect markets. They can make market makers buy and sell and move things around, which I think is why Apple is almost always down. And 5 days later, Apple's almost always up after earnings. So some of these equities, we see some moves that are overdone, and we don't really understand why things happen. The market sort of behaves in its own sort of way. We'll talk more about that. But did you want to talk about the repo stuff now? Is that too wonky to throw in here?
Well, we can talk about it in a little bit for a little bit because I think it explains the last couple of days of movement in the market to the downside, as well as the potential bounce back to the upside too. Um, I, I believe, we're talking mechanics, we're talking about plumbing essentially of how trading works. And one of the unique things about the financial system, this is a really big plumbing situation, is that the banks have been running into a little bit of a cash problem since the government has been shut down. We're now going on the longest shutdown ever, that we have had as a government, and it's starting to impact cash flow, and the requirements that banks have to have cash on their balance sheets. Because what's happening is with the government shut down, all the transactions that they would normally be spending money on, well, they're stuck in the Treasury General account. There's over $1 trillion right now sitting in the Treasury General account because we're essentially shut down. And whether that's payrolls, whether that's contractors, all the money that the government would have been spending is still sitting in the government's bank account, waiting to be spent. That as soon as we open up, it will get spent. But it's causing a little bit of a cash squeeze in the rest of the economy. And so, what banks are having to do right now, because they're short on cash, is they're going to the Federal Reserve. They're going to use the repo market, to borrow money overnight that they have to have on their books, in order to be compliant with Dodd-Frank and some of the other regulations that banking institutions have to have, that have to follow to stay solvent. So this issue is usually not a big deal unless it gets to the point where it starts to panic overnight lending rates and starts to have a question mark of, is my money safe in the bank? And whether we have potential bank runs. And yeah, that's an interesting chart right there because you're bringing up what happened right before COVID, was kind of the last time we really experienced this. And I think once the government decides to open back up, this issue will be forgotten, and all that money that was in the Treasury General account will be back into the system and back into banks, and we'll be fine. But in the short term, it's got it panicked a little bit. And I think that's why the markets turned around midday today. Is the talk is the latest conversation is Senate Minority Leader Chuck Schumer has come out and said that the Democrats are ready to negotiate. This is their option. They're ready to settle their differences and reopen the government again. And so the market has rallied intraday and come well off the lows where we were at earlier in the day. Now, there's not an agreement signed yet, so maybe it's getting a little ahead of itself. It's also Friday afternoon. We're about 30 minutes before the market closes right now as we're recording this live. So I do think they want to get something resolved before the weekend, or at least the hopes pointing in the right direction before the weekend. But I think that's what's caused the sell-off the last few days too, is that banks are having to liquidate assets to get cash right now to satisfy their needs that they've got to be holding cash on their books. I know,
Yeah, it
sorry,
certainly looks
long
like
description.
today's one of those buy the rip, sell the dip. Or is it the other way around? Buy the dip, sell the rip.
Yeah,
We've definitely have seen a reversal, which has been what's going on for a long time. It's just really interesting too that CNN Fear and Greed Index has us back into extreme greed. I mean, this is the sort of stuff
extreme
that
fear, you mean?
extreme fear. I'm sorry, extreme fear. It's the other side. Extreme fear. Here we are, just 5% off of all-time highs just a little while ago, a few days ago, and we've got this is a good thing in my opinion. I've been in our communities talking about this quite a bit that you don't have market tops with extreme fear. It tends to be the opposite. That's the other quote that I wanted to share here from John Templeton, which is not. I mean, I'm not saying any of this facetiously. I think this is true. Is that let me drive the bus here. share the screen again. This quote from John Templeton, which is something I got from Ken Fisher mentions this a lot. I love Ken. I tend to read everything he publishes, but bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. Where are we in that cycle, Greg?
Well, I don't think we're at either extreme. We've definitely had a nice bullish move. I mean, we're up 40% off the lows in April, and so it's hard to say that we haven't had some extreme optimism in the markets in the last 6 months. Um, but I don't know that we are delusional yet either. Like you said, there's still a lot of fear. There's a lot of talking points as to why we should be selling the market. Not everyone is screaming buy, buy, buy right now. And I think that's a reason that could be that I think we're somewhere. If I had to say in that graph right there, which is one of my favorite bubble graphs of all time, and it is amazing how accurate that graph is when you actually go put it on performances of bubbles. Um, the 2001 bubble, the 2008 housing bubble, because again, that kind of maps the housing prices more so than the S&P at the time. I think the first run up that Bitcoin had is a similar. You could map that similar bubble, and maybe we're doing it again with Bitcoin. I'm not sure. Bitcoin's kind of changed a little bit from a euphoric tool to almost just a tech stock. Um, but I would say maybe somewhere between enthusiasm and greed right now. Maybe we're around greed. I mean, there've been some crazy moves in stocks to the upside in the last 6 months, and it's not just Robinhood and Coinbase. You've had moves in companies like Oklo and companies like Micron. I mean, Micron's doubled in 3 months. It's up 100% in 3 months. I mean, that's a little bit delusional, maybe. Um, Sorry, I've traded Micron for a long time. It does not do this. This is the movement that Micron has had in the last 3 months is absolutely not normal. So
Uh-oh. I got filled on something. Yeah. Oh, I guess it's a good thing.
that's a good thing, I guess.
Two things.
So I don't know. I don't think we've hit the new paradigm and this little pullback we've had on the last couple of days. I don't think this is the bull trap. I don't even think we've started to roll over yet. I still think there's some inflation of the bubble. I think what we're experiencing right now, like I said, these last 2 days is just a plumbing issue with cash flow. And as soon as the government reopens, then I think everything's going to go back to normal. Um, the normal bullish chase the markets to the upside right now, but who knows? Maybe we are broaching that new paradigm level, but I don't think we're there yet.
I'm a proud owner of some. I got assigned early on some short puts. Nice. I'm buying some. Yeah, I'm buying some shares here of Peloton. Not Peloton of uh sorry, what is
Robinhood,
Robinhood? Yeah,
Palantir,
Palantir. Yeah, I gotta. Yeah, nice. Not Palantir, Robinhood. So that's
Robinhood.
some other positions being adjusted. So, anyways, that's cool. Yeah. So where are we in this thing? I don't think we're quite at the peak of maximum euphoria. You typically see um, large IPOs and a lot of deals that happen. Prices definitely go up. You see leverage get out of control, and you see some extremes with that. In fact, we are seeing some of these signs. I think of like leverage that some of the recent data is showing that retail margin use is near peaks, so people are using margin to jump in. They're
Yeah, I was going to say the last report we're over $1 trillion in margin right now, right?
Mhm.
In retail broker margin debt. That part's there, but yeah, we don't see a lot of IPOs right now. I mean, there's just a handful. Uh,
One of the other signs is the covers of magazines and newspapers, which if anything, the sentiment there is negative, right? There seems to be this disbelief in the sorry about that. There seems to be this disbelief in terms of what's happening with AI. There's criticism about what OpenAI is doing, and um, yeah, so it's interesting to see what's happening there. So I think
I know we didn't plan on this, but I want to ask you, did you see the request for public funding?
he came out today and said that he's not he's only stepping up with how the government is asked. Some portion of the services are going to be used by the government, and the government is looking to make investments in chips. And so he softened it a little bit. Yeah, I saw that.
Did you see Brent Donnelly's response yesterday?
Oh no, what did Brent say?
Sorry, this is a family show. I can't say it.
Oh, oh, yeah, okay. Begins with
Uh,
F, huh?
yeah. No, that I saw that yesterday. I'm
Oh,
like,
yeah,
what?
just 2 words, right?
It's just 2 words. It's
Yeah.
all it is. Just two words.
Second word is off. You can guess the first
Yeah.
one. Yeah, that one
No.
got it. Yeah, it went viral. I think his tweet went viral. He's got a lot of people.
Yeah, that's I hope we don't go down that road, but I can see the potential that we could. And especially when you come on the heels of um oh, who was it yesterday that said that China is winning the AI race or will win the AI race? Um It was some scientist, sorry, I'm not very well quoted right now, but it's because we went on a little bit of a tangent. But it's this conversation piece of that China is ahead of us in AI right now, at
Is
least
it
according to this guy's opinion.
Brian Romel, or was it, Rainmaker, I think is his Twitter handle. Do you follow him?
I don't.
No, not Rainmaker 73 is Massimo. I'm thinking of Brian. There's this guy Brian Romel, or I forget exactly his. Yeah, I saw it. I think yesterday as well, but
Oh, now I know who it was.
oh,
I should have said who it was. It was Jensen Huang who said it.
oh. Said the Chinese are going to win the AI
Said
race.
that China's going to win the AI race with the U.S.
That's some kind of scientist.
Some scientist, a really rich scientist, runs the largest company in the world. Um, and again, I think it's on those news, that piece of news, that the argument came from Sam Altman of, hey, we need money. We need the government to step up and backstop us with funding. And I'm not okay with that. I never am. I'm like you, Eric. I'm very
Yeah.
libertarian. I'm very capitalist at heart. In fact, I just showed this off yesterday to someone. You got it for me. I have not been to this right here.
Yes.
I am a card carrying capitalist, but I think the government needs to stay out of business. Um, but we'll see where that leads. But going back to where we started, sorry, I distracted us. I agree with you. I don't think we're seeing, although some of the signs of tops in the market, we're starting to see some of it. Things like leverage and obviously some rapidly rising prices. We're seeing some historical PE ratios; those multiples are rising in comparison to historical. You don't see the extreme euphoria, at least that you've seen in the past. So that's why I think this bubble can get bigger, and I think it will. once the government decides to start letting money flow out of the Treasury General account again, at least. I sure hope they do, because, I don't want to pay my son's rent again this next month. Him being an employee of the government right now, being an active duty soldier in the army. So,
You and I have been through a lot of this, these cycles before. You mentioned some bubbles, and certainly had the what happened in 2020 following COVID. Was a really weird time. The housing bubble in the 2000s and the dot-com bubble when you started trading. These sort of things do build confidence. I was actually talking with with our friend Jim today, and I wish that I just wish that I had the knowledge and the confidence that I have today. I wish I had this. Back when I graduated from college, I was reminiscing about in the early, I guess it was late 80s, that I graduated, started putting money into my 401k. And I used to call every day. There was, whatever I don't know, it was Fidelity or whoever I would call. And I, enter your social security number, enter your passcode, and then they would, give you the daily balance. And every day I would call and I put it in my little Excel, and I'd be, hey, I made $5,000 today. Well, no, I don't think I ever made 5,000 one day. Back in those days, I remember distinctly getting to the point of I remember, like, I started doing that when I had about $7,000 saved, and that's when I started paying. So, we made $200 today. We lost $200 today. That's a joke. You don't actually make any money. And looking at pullbacks, now when we look at a long-term chart, go look at a 20-year chart, 30-year chart, and you see these pullbacks, and you're actually envious of those pullbacks. You're like, that's what I should have put my money in, at the bottom. And at least don't pull your money out, because those dips, in the long run, pay off. I shared some data with you last week in the Options Animal Weekly show we did, that each time we hit an all-time high, it's a bullish signal. It feels scary, right? Because we never know when that's going to be the top. Not the top forever, but the beginning of a bear market starts with an all-time high. Uh, and so when was the last, what's the last one? Well, since 1970, 96% of the time, we hit another all-time high within a year. So since 1970, every all-time high has been followed by another all-time high within a year, 96% of the time. So with those sort of odds, you should be going all in. Not all in, but you should be going in at the top of the market. Now, we think about these bubbles and this euphoria, and when do we hit the top? I don't think we're anywhere there. And certainly this week with the pullback, there's been nothing substantial that has changed. There's no fundamental indicators, and standing back and looking at historically when the Fed has cut rates, if we are not in a recession, 100% of the time the market is higher later.
And not just a little bit, like the average for the last 5 times, it's a 20% annual return a year later. So yeah, we can be significantly higher.
And we don't have any indications of a recession. Of course, we don't have any data now because the government.
I was going to say, how do you know?
But no, we would see it in things like the ISM and some of the other employment data. We get ADP employment data. We do get some retail sales numbers and earnings results. And we had this earnings season did it again. It blew away all expectations. So we had fantastic earnings. We're just getting through the tail end of earnings now. The economy is this K-shaped economy, but by and large, the majority of consumer spending is from the top half of that K, and they spend most of the money. So, consumer has been very, very resilient. And not to say I don't want to, not demonstrate empathy for people who are experiencing rough times, that is still happening. And when we're talking about inflation going down, those are not prices going down. It's just not going up as fast as they used to. Prices are not going backwards. Prices are still going up. Some things are going down, like oil and gas, are crazy low, which thank goodness if they weren't, it would really be putting a lot of hurt on certain sectors in the economy.
Well, and I think that's a good point that you do in whether it's an inflationary environment or whether it's a bubble environment or both. We could be actually in both right now. Um, you want to own assets. You don't want to be sitting in cash, um, waiting, because if you sit in cash and even if the markets don't rip higher and it's just inflation that causes you to lose your buying power, you're losing buying power. And or if it's again the markets are running without you because you're trying to time it and hit this, pick the top and be in cash waiting for it. It's too hard to do. Uh, for me, and we hammer this on this program all the time. There's a better way. It's the collar trade. I mean, you can still be in the market and be invested and still protect yourself against a potential downward move by using the collar trade. And yeah, you're going to give up some upside. You're not going to capture all of the big swing, but you're still making good returns and hedging yourself the entire time. And that to me is the better way. Is you can still trade this inflated bubble and not be afraid of it, and just be like, yeah, let's participate, but not have the fear of I'm my luck. I buy at the top, right?
Right. Yeah. How long did it take you to really understand the collar trade?
I mean, I still perfect it because the market still changes. I think the biggest changing over the years has been the addition of strike prices and liquidity, and all of those things have been additional benefits to it. I'm not going to say that zero DTE options are a benefit to it because I don't trade those as part of a collar trade. That's not part of my trading strategy. But the first time around, a year probably before I really started to understand. It's like, oh, if the stock is dropping and I'm still okay. Um, but like I say, I'm still perfecting. I'm still learning almost 30 years later
It,
from when I first started.
reminds me of I remember when you start watching poker on TV. You remember that came in? Those
Yeah.
guys, they would talk about Texas Hold'em and they would say, takes
Phil,
a long,
Phil Ivey and Daniel Negreanu, right?
right, those guys. No, who were the announcers? I can't remember
I
their
don't
name.
remember who the announcers were.
But the older guy always used to say, Texas Hold'em takes a minute to learn and a lifetime to master. And I would have to agree that my understanding, my level of depth of understanding is something as simple as what is a collar trade, which is long stock and a short call, which think of as a covered call, and then adding a long put to it. It's really a very, very simple concept. There's three components to it, which is easy to get your head around, and I can explain it to somebody in 30 seconds. What does that mean? You're generating income by agreeing to sell your stock at a certain price. You're buying insurance, which means you can't lose more than a certain price. It's very simple to understand. But even like you, I'm still understanding the subtleties of this beautiful, elegant, simple trade. And I really this week, this past Saturday in my open forum, one of our students asked me, is like, "Hey, Eric, can you talk about this? You've talked about this consciousness and competency thing, and I think it's worthwhile sharing here. This is actually what I wanted to share." And I add in these other slides, but when I was thinking about what we would talk about today, you and I were talking ahead of time. I really wanted to talk about this consciousness competency matrix, which I'll build and I want to explain because I think it's an important framework for people to understand and recognize because it applies to everything. It's not just the collar trade or trading stocks and options. it applies to everything. I had a conversation with my jujitsu instructor about this, and he's like, wow, that's very powerful. I never thought about it, but it's absolutely true. It doesn't, could be learning to play golf. It could be being a brain surgeon, but the way that we all, oop, that's the wrong slide. Let me start with the uh, right slide here. Um, Slideshow, the current slide. Consciousness competency matrix. So if you think of two axes, one being consciousness, and this reminds me a lot of Daniel Kahneman's book, The Thinking Fast and Slow. So consciousness is like how alert are you? How engaged are you in thinking? And down here in the bottom corner, you're not thinking very much, and up here you're thinking a lot. And by the way, it's fascinating in Kahneman's book that they can actually measure this when they are asking people to solve problems. They can tell when people are thinking, and you know how they do that, Greg? Did you remember that in the book? I know you read it.
I did read it.
They measure the pupils of the eyes.
That's what it is.
Yeah, so they can tell your pupils will dilate when you think, and this is one of the reasons, back to poker, why people wear sunglasses, because when they're thinking very hard, often they're bluffing, and they're. I have a friend, and when I play poker with him, if he's bluffing, he's like, "How do you always know when I'm bluffing?" I said, "You have a tell," and I'm not going to tell you what it is, but when he's bluffing, his pupils get really big. So I always know when he's bluffing.
And hopefully your friend is not listening. Or you told him his tell.
But he won't play poker with me anymore.
Or he won't play poker with you anymore.
So there's that. So when you're really thinking hard, not thinking very much, and then also a competency. So when you're
wait a minute. I play poker with you. Are you talking about me?
You're usually sitting to my side.
Oh, that's true.
I don't usually look at your eyes. But usually you are to my right or to my left, not across the table.
Sorry, I interrupted you. Go back.
No, it's a good one. That's yeah. So I probably have a tell. I probably have the same tell. I don't know. I haven't looked at my pupils, but so competency is, one side's not good, one side is very good. So if we start in the bottom left-hand corner, we've got somebody who is not very conscious and not very competent. And this person we call the clueless person. So they would say, when I lived down south in Alabama, they would say, bless their heart, which is not a good thing. When somebody says, bless their heart, those of you from the South, you know exactly what I'm talking about. It's like, they don't even know that they don't know. Like they're ignorant of being ignorant. And this is where everybody starts. We all start in this box where we are not capable. We are not even aware of our lack of capabilities. And the scary thing is sometimes people find some success. This is one of the things about investing, which is different than, say, engineering, where you're building a bridge, or brain surgery, or open heart surgery. In those fields, if you make a mistake, the consequences are dire. In our field, you can make a mistake and make money. Like you could do something stupid and make money. And then the bias of there's all sorts of heuristics and biases that affect people and make, I did it, I made money, it must be safe. But anyways, everybody starts clueless. Let's all recognize that. Everybody starts there. And then you sort of transition into this part where you realize I'm not very good. And you think about it. And this would be what I would call a student. So somebody who recognizes that they're not good and they need to get better. But then there's this continuum that where somebody can get to a point of being competent. And I call this an apprentice. So this is somebody who's executing well, but in terms of their efficiency and how much they think, they have to be very deliberate. And I think about when our clients at Options Animal are really embracing what we teach. They'll start trading a few trades here and there without trying to jump on some of the example trades that we do. They'll experience some losses, some wins, but then they eventually realize, like, wait a minute, I want to be consistently making money. What do I need to do here? So they will get very explicit about following the 6-step. We have a simple 6-step process. and they will get very explicit. And that takes a lot of time when you're getting started, going through the due diligence, looking at technicals, which is easy, looking at fundamentals, which is I'm sorry, looking at technicals, I think is the easiest thing to do. Sentiment is a little bit harder. Fundamentals, when you start really diving into fundamentals, I mean, you could easily, that could be a time suck. You could spend 4 to 6 hours on one company if you're not careful. But the benefit of doing it over and over again is you become more efficient at it, and you don't have to redo it every time. You don't have to start from zero. You just kind of look at the changes. But then we go through the rest of the 6 steps, and it takes time to do that. But you'll find that if you do that, your results get better. You will get better. And where everybody wants to get is, down in this corner down here, which is the expert. And these are people where they are not using a lot of brain power, but they're executing at a high level of competency. And Greg, I always use you as the example of this, especially like trading around Apple. I'm always impressed by your ability um, to master, especially a lot of different trades, but Apple specifically, I use you as the example, and I keep thinking that you taught me years before you asked me to come on and start working, but and I'm thinking like I'm going to catch up to you, but we're on this ladder. We just keep moving up together. You keep getting better, which is a good thing. But this consciousness competency matrix, there is no path to go from being clueless to being an expert, um, other than maybe the grace of God. And sometimes we experience success and we confuse ourselves with being an expert. Listen, if you haven't gone through this path, and it is painful and it takes time, you're probably experiencing luck and not expertise. So don't confuse uh, good outcomes with necessarily the level of success. Speaking of poker, I think of Annie Duke's book, Thinking in Bets. Annie Duke wrote this book, which I think is phenomenal. And she talks about good process and good outcome. And she has a 2x2 matrix. So you can have good and bad process, and you can have good and bad outcome. So you can have a bad process and good outcome. That teaches you how to do stupid things. And eventually it comes back. I think of people taking high risk trades that are have little payoff, but high risk, but high probability. And eventually those people leave the market because they end up losing. But you can do the process, right? You can follow the options animal 6 step process and do everything right and still have a bad result. It can happen. But
It's interesting that I just had an epiphany. I actually think you're right. I think people who do high probability, low return type of trades have a higher risk of actually blowing their accounts up than people do, say, like a Nassim Taleb, who do extreme low probability but really high return type of trades. I think their ability to stay in the markets is actually much greater than the ones who are doing the high probability, because when you're wrong, you're not wrong very large. And so you stick around. But when you're wrong in a high probability trade, I'm thinking specifically of those organizations, those entities that structure, let's just call it what it is, iron condors on the futures markets. Those are the ones that are really, really at risk of blowing up when you have some type of 2 standard deviation move that's not supposed to probability, it's not supposed to theoretically happen very often, right?
yep.
But they happen. How many times have you had them happen in your investing career already? You know,
And we've seen enough casualties that it happens to people. So it's unfortunate, but we see it happen to other people. So on this, for people who are thinking through this framework, I wanted to add one more dimension, and that is that, and on the same sort of scale of consciousness would be time. And this is, time invested in each one of these phases. And the clueless person doesn't put a lot of time into things. They're just, randomly doing stuff. When you become a student, you're going to invest a lot of time but not have good results. And then when you get to this apprentice phase, which I think you're okay just staying in that box, you're gonna be investing a lot of energy, a lot of mental energy, a lot of time in doing the due diligence, setting up your trades, monitoring your trades, tracking and adjusting your trades is going to be a lot of work. But the payoff is that eventually you'll get to this point where it's just you've been down this path, you realize this path is not fruitful, and so you're not going to go any further. And then you get to this point of executing as an expert. And so, folks, I just do an honest assessment of where are you? Where do you think you are on this matrix, and be honest about it, and then ask yourself what you need to do. And if you need help, reach out. We're here to help you get better, and that's the whole purpose of why we exist.
And then eventually you realize that Socrates was right, and that the only thing that you know is that you don't know anything, right? And you start back into the clueless phase and go back into study and focus and work, and it's a lifelong circle.
Do you know one thing I do know is I remember the first time that I presented this. Do you remember?
It was at a summit. I want to say in Hawaii, but I don't know if it
It
was.
was. It
Was it
was.
Hawaii?
We were in Honolulu.
Yeah.
Yeah, we were in Honolulu.
I knew it was somewhere warm. I was thinking maybe it was San Diego, but it was Hawaii.
And I asked my wife, if do you want to come with me to honey, I'll expense paid to Hawaii. She says no. So I'm there by myself, and I had spent some time on the beach, and I'm sitting in my hotel room, just fine tuning my slides for the next day, and I've got the TV on, and it was there was a Star Trek marathon on that weekend. It must have been an anniversary or something, because some channel I went on was just doing one episode of another right after another. And I'm thinking, you know what? This model applies. When you think of Star Trek, there's characters that are here. So, who's the guy that's in the corner there that thinks a lot and executes with competency? We all know who that is, right?
Yeah.
Spock always thinking through everything, uh, always sharing the odds, and knows the risk. Just not very emotional, but very very competent. What characters in that bottom right hand box? Who's down there?
Well, that's Kirk.
Of course, Captain Kirk goes and battles the salt sucking monster to save the ship, or flies through the asteroid field when Spock tells him, Captain, I calculated 2% probability of survival. Don't ever tell me the odds. Was that from that movie? Was that movie, or was that?
I don't remember. Yeah, it sounds like it. It
Yeah.
sounds like it.
So then, of course, in the top left-hand corner is Chekhov, who was introduced in season 2 to make the show more appealing to students. Right. So he was to younger people, anyways. Who goes in that bottom left-hand corner, Greg?
Um, Scotty?
No, the red shirts.
Oh yeah, the red shirts. Yes, the red shirts.
Where's my zoom?
I was gonna say it can't be Scotty's. Scotty runs the warp speed.
How do I'm not so good at my Mac here. Oh crap!
Oh, you could see it. You could see the red shirts there.
So it says, let me read this to people in case they can't read it. It says, I want you to grab 3 shovels. Now there's 3 red shirts. Okay, grab 3 shovels and dig 3 6-foot deep holes up there. I'll explain it to you later. What's going to happen to the red shirts, right? They're clueless, and I'm going to die. Oh no, I'm a red shirt. So those are the people who are going to die in that episode. Unfortunate but true that the people who are in that clueless category end up being catastrophes. And we say it in a little bit of jest, but I do know people who have had literally life altering moves from doing strategies that we would advise people not to do. And so I'm very empathetic of those people in those situations, and hate to hear it and don't want to see it happen to anybody. So, which brings me to the next clue, because if you're in that box, or the next slide, if you're in that box, there's a slide that I like to present when I'm talking about this, and it's the Dunning-Kruger effect. And again, this talks about the level of competency, where on the left is not a lot of competency, and then to the right is a lot of competency. And then the confidence, this is a different sort of matrix. We don't have, maybe we should do a 3D one of these and have competency in here as opposed to confidence. And that we get these people who are very low in the competence level, don't know anything, but an extremely high amount of confidence. You know, I felt this. I started being, successful trading options really out of the gate. And it was like, this is easy. Why doesn't everybody do this? And then not really realizing that I was at the peak of Mount Stupid. And then you end up getting humbled, and you end up going down into this valley of despair where you learn more, you're definitely smarter, but your results are not so good, and your confidence gets crushed. And I distinctly remember as an options animal student, um, stepping away for 4 months. I took the wind right out of my sails. I had several losses. I didn't understand how or why. When I did start to learn what I did wrong, it didn't make it any better that I'd still lost a lot of money. And it took the wind out of my sails and put me down there on this valley, which eventually you get back. And I've seen this Dunning-Kruger chart drawn several different ways. And I have seen it where this plateau of sustainability doesn't ever get as high as the peak of Mount Stupid, meaning that your confidence is never as good. And I think that's probably a different version of this chart that's worthwhile talking about. So again, I'm asking people to sort of honestly assess where you are on this. And there's an ROI for it. The ROI is that you're going to have better results, consistent results. You're going to make fewer mistakes. Do you have any comments to add on that?
Yeah, I mean, one of the things that I would throw in there from my experience is, I teach a lot of our marketing classes on the front end of Options Animal to share my story. Because for me, um, the term that I use all the time when I first started trading in the internet bubble was that I was mistaking a bullish market for brains. Um, and or maybe it's the other way around. I was mistaking brains for a bullish market. I was assuming that I was a guru right out of the gate because I made so much money because I was experiencing a bubble. And my guess is, folks, those of you who are listening to us who aren't already Options Animal students, if you've actually stuck with us this long, um, you're probably experiencing a similar thing right now in the markets. And I'm not saying that maybe you don't understand it, but I'm going to invite you to really take a real good assessment of, is your success you've had in the last 2, 3 years in the market, really since the 2022 little bearish correction we had. Since then, since this AI bubble really started and the euphoria around artificial intelligence started in 2022, um, is your success because of your processes are good, or is your success because you bought Nvidia and had just never sold it and you've just held on? I mean, I'm not saying that's a bad thing. Maybe you could say, well, that's part of my process. And okay, just make sure you do the self-assessment, because what I did when I first started trading is that I assumed that stocks all went up and all I have to do to make money is just buy call options, or do covered calls if you want to be a little more conservative. And that works great in a bullish market. But I was mistaking that bullish market for brains. And I too was on that peak of Mount Stupid right there. The other thing I would also throw in there is the valley of despair, like with anything, if you look at it the right way, is just a teaching moment. And if you can learn from those errors in your processes and fix them, and you'll eventually climb and climb that slope of enlightenment. So I love this, the Dunning-Kruger effect. I agree.
And you don't pay too much tuition. And I'm not talking about the check you write to Options Animal. I'm talking about the check you write to
Yeah.
cover the margin call.
Yeah, exactly. The
Yeah,
check
I
you.
joke around because I had this right in that period of time. I had peers who were, students who are going through the program the same time as me, and some people who are further ahead of me. And one person said, "So did you learn anything?" I said, "Yes." I said, "Well, then don't call it a loss, call it tuition." And so it was a sort of a euphemism, I guess, for the money that I lost in the market. But I definitely learned some painful lessons. In fact, I do a presentation where I point to at least $14,000 that I lost as a student, going through, trying to stumble through, thinking that I was better than I was. And I definitely learned from all of those lessons. I've been able to point at those and not make those mistakes again. It just would have been really nice not to have lost that $14,000, considering I'd already paid a company to teach me this information. I just wasn't taking advantage of it. Well, that was all I wanted to share today. I really wanted to get those last two slides in there so that um, this is where we are in this market. We're not I don't think we're at the market top. I'm think we're going to see higher highs. But we're closer to the top than we are to the bottom. Let's just put it that way. And we will see it. I don't think the signs of euphoria and market peaks are quite there yet. But this bubble, is it a bubble or I don't know. It definitely will deflate. Whether it pops or not, we'll see. It's just be patient and make sure that you always know your risks.
Amen to that. Amen to that. All right, my friend. Good talking to you again.
You too.
Thanks for listening to us, folks. Don't forget, if you don't already, to like and subscribe, share it with your friends, post comments and questions, helps the algorithm. So thanks, everybody.
Catch you later.